So the markets have been quite volatile lately. So let's look back on some of the historical data of the S&P 500 to see what is normal and what should we have lots of emotion around. So I have this chart here, and you can see that it's about the S&P 500 and that there is a zero return all the way down to 60 or an upwards trend of 40% up. And we're looking at the years 1980 all the way to 2017. Now the blue dots show in each year how far down or what a dip was in the market. And the orange bar is what it ended up for the year from January to December. So as you can see, there is a 3 to 5 to 10% down almost every single year. It might be further down, but as you look across the graph, it's a normal thing, a yearly thing like your birthday or springtime. And you know, we could have something like a 19% down in 1998. Can you imagine looking at your 401k or your brokerage account and thinking, wow, we are going into a correction. What should I do? In that particular year, if you had just stayed the course and been in the right things, the S&P 500 that year ended up 27%. Wouldn't want a 27% up. You'll notice that most of the years on this chart end on a high, even though there was a dip in between. So stay the course. Having these downs like we're experiencing somewhat these days is a normal thing. It's like you breathing in to get oxygen. You can't just keep breathing in. You do have to breathe out to be healthy. And that's what the markets are doing right now. It's just to breathe out to be healthy, and then we'll move on from here. Just make sure that you have a good plan, a wealth manager that you trust, and we can take down the emotion, the scared, the frightened, the what ifs. If you found this video to be helpful to you, to bring down that emotion, for you to say, okay, we're going to have a correction or two, and you'd like to have it be heard by someone you care about at work or at home, family, friends, please do forward it along, and we are always here to help.